Let's talk about another economic side of the story, and that is risk, that is insurance. Because insurers everywhere are no doubt trying to figure out how to price in risk that exists and risk that may exist or may not in 3, 6, 12 months. Contessa Brewer covers insurers here for us at CNBC and joins us now with this side of the story.
So, Brian Morgan, what I heard from the head of aviation and marine for Lloyd's Market Association told me that ships already are notifying their insurers of their planned transit through the region. And the insurers, the underwriters, they're adjusting terms and conditions to fit the risk. He also told me the number of Western ships in the Red Sea already is markedly down and says every insurance and reinsurance source is now looking at what the risk is. Today, I talked to many of them. They all say the same thing. The primary concern is the Strait of Hormuz and whether that remains open. Insurers offer solutions, though, in situations like this, like war risk or political risk. For that, they have coverage for contingent business interruption, which covers financial losses from disruptions to third-party suppliers or customers due to geopolitical conflict. And the carriers of this would be syndicates with Lloyd's of London. You've got Chubb, AIG, Allianz, AXA, and then the big reinsurers, Swiss Re and Munich Re, would all have exposure here. Everest Group also has some moderate exposure. Marine insurance already is rising significantly in the region, with shippers paying 60% more than just a month ago, according to global broker and marine insurer Marsh. Aviation insurance likely is rising as well. And some zones in the Middle East or North Africa could get excluded entirely from reinsurance coverage. That would in turn cause flight cancellations. And we got to talk about cyber and the potential for retaliation. Most cyber insurance policies exclude coverage for state-sponsored attacks. So this has the potential of leading to costly litigation over years if insurers deny the claims and then policyholders sue. Industry insiders tell me, though, the contagion effects, even if you don't have direct exposure to Iran, like if you see these trickle-down effects, disruptions to cargo, transportation routes, airspace, canal access, all of that significantly affects global supply chains and the trade flows. And so you may see actually an opportunity for insurance and for the brokers in demand rising.
But if nothing happens, rates are going up. I talked to Anup Singh of Oil Brokers Limited, emailed with him, I should say, in Singapore today. He said that the cost for a oil tanker is probably going to be about $100,000 a day now, up from $24,000.
That's an incredible jump.
Just 12 days ago, it was $24,000. Now it's $100,000. I talked to another oil broker. He thought it could go to $150,000. If nothing happens, is this pure profit?
No, because some of these shippers are actually changing routes. They're changing their behavior before the insurers levy the new premiums on them. They're saying the same thing is true for aviation. They may change behavior before the insurers ever get to it.